Hello and welcome to another update video about Natgas. So Natgas currently trading around $3.06 in the current February contract. We can also take a sneak peek in the March contract in a minute, but I think it's trading a little lower, already giving us an indication where things might be heading. But for now, the idea is still unchanged. By the way, it's only a quick update because not too much happened since yesterday, even though we see a further decline here, which is sort of what we wanted to see in this current wave 2 correction potentially. Quick reminder, we could track 5 waves to the upside here in a potential wave 1. Most recently, Natgas broke above initial resistance, and we can identify a 5-wave move to the upside. So whenever I can see 5 waves up after breaking above initial resistance, by default, I take a bullish perspective until support levels break again, until the market tells me, oh no, we are still bearish. So of course there is still a bearish scenario. In this case, the market would, however, have to break below $2.40 to confirm that. Until then, I'm taking a bullish perspective here. We have 5 waves up in a wave 1. Recently, the peak was around $3.40. I'm currently looking at an ABC structure to the downside in a wave 2. Here we had the A wave that bottomed around the 11th of January, a B wave, 3-wave corrective rally, topped at around 338 on Friday, and now the market is trending down, opened, let's say, with some downside, and we are moving down further. Already yesterday, I think we saw that gap, and we're moving down further here now in the C wave. What would be a key target for the C wave? Well, if it really follows through, then a C wave target would typically be the earliest target, would be the 100% extension level, the so-called 1-to-1 ratio. It's at $2.92. Does it mean it has to stop there? No. Overall, we have support levels below as well, $2.87, $2.72. But ideally, I'd like it to stop somewhere here before breaking below that 50% retracement level, which is at $2.72. That's also pretty much in line, I think, with the 1.618 extension, which is also one of the key targets for a C wave. It's just below that at 267. To be honest, 267, that should be it. I mean, if it goes below that, it would be quite a deep C wave and might already start to shift probabilities towards something more bearish. But then again, we shouldn't really interpret then too much into this, because as long as support is holding, it's holding. This is overall the ideal, let's say, support zone for a wave 2 pullback. Yes, the 78.6 fib level is deep. Natgas likes to trigger that sometimes. Okay, so we can use the standard support levels, but also the Fibonacci extensions to calculate a target for the C wave. I'm just saying that anything below 267 is very long. It would be a very long C wave then. Just something to to watch at least for. And yeah, the idea is that this is my default ABC. If we see now a break above last week's highs at around 338, I would have to assume the wave 2 already bottomed. That's at the moment not my primary scenario, however. Yeah, and I think this is really everything I can tell you at the moment. So I'm still watching for a third wave rally higher as soon as this wave 2 is over. Now let's also take a look at the NGH, which is the next contract. Let's just open that. I'll soon move over to this one. Let's see. Yeah, that's the March. See, it's already at 294. No, 249. 249. What was the previous one? But that will still change. 306. Okay. So yeah, it points towards the yellow box. Okay. So that's what we're looking at. But overall, where are we here? So support levels might be a little bit different at the moment on this chart. Support is here between, well, 223 is the low, 78.6 fib level. Anything below that would open the door to something more bearish. And it basically starts ideally at the 38.2 fib, which is here at 250. Okay, so these are the levels: 250, 242, 234, 223. But for now, we stay on the previous one. Just want to give you an idea. It's already trending lower, way lower. might give us an idea where things might be heading. But yeah, overall, no reason to change the assumption at the moment. The idea is that we're still in a wave 2 correction, but a break above last week's high would already trigger a third wave, okay? And if we are in a third wave, I mean, just to highlight what would be a target roughly for this third wave, if the wave 2 already bottomed, which I don't expect at this stage, but if it's happened, then should take us to, yeah, $5 and beyond. So it's quite aggressive. So a third wave is typically the most aggressive rally in a 5-wave cycle. Yeah, that's just a quick update about Natgas. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 and stocks, then check out the S&P 500 and stock service. You'll find a link in the description. Thanks a lot for watching. Bye-bye.